Welcome and thank you for joining us for another exciting session of Informally Formed. We're going to be talking about a very critical sector, the financial sector of Bangladesh. And talk about this very important subject is someone equally important who needs no introduction, Dr. Ahsan Mansur, Executive Director of Policy Research Institute, Bangladesh. However, I will nevertheless give him a short introduction. His introduction could go on forever, but let me take a short stab at it. Dr. Mansur started as a lecturer in the Department of Economics in Dhaka University, joined IMF in their economist program, and then went on to do his doctoral program in Canada. Now, his career with IMF is rather extensive. He has, in various capacities, worked in several different areas and in various countries, including the Middle Eastern countries, Asia, Africa, Central American countries, in various capacities. But most notably, he also served as the IMF Senior Resident Representative to Pakistan, and also as fiscal advisor to the Ministry of Finance in Bangladesh. And one of his notable accomplishments there was his instrumental role in rolling out the value-added tax program for Bangladesh. Also, I must mention that he served as the division chief of the Gulf Cooperation Council, and was also IMF mission chief for Saudi Arabia, Kuwait, and Oman. Now, I could go on, but I guess that would suffice. For people in the know, do not need any introduction of Dr. Ahsan Mansur. So, Dr. Mansur, a very warm welcome to our show.
Thank you. It's my pleasure.
Our today's topic is the financial sector. And Dr. Mansur, of course, you being also the chairman of BRAC Bank, I cannot imagine anyone who would be in a better position to talk about this sector than yourself. So let me first ask you, how would you characterize the performance of Bangladesh financial sector as a whole? And also, what are the challenges for Bangladesh banking sector? And where do you see the banking sector evolving over time? I know it's a loaded question, but over to you, Dr. Mansur.
Thank you. I see that Bangladesh is still very much lacking in the financial sector. Of course, banking sector is the best performer, no question about it. It dominates in the financial sector. Then comes the stock market, or asset market, or capital market, and that has not been doing that great in the overall history of Bangladesh. It's been ups and downs, and mostly it is discouraging, I would say. And as a percentage of GDP, market cap is very low, and whenever it tries to go up, it is hit by a bubble, and then it falls flat. Bond market has really never developed in Bangladesh, and insurance sector is in total disarray. With that introduction, I would say that the financial deepening, as we generally measure with what we call M2 over GDP ratio, Bangladesh, it is now below 60. In most countries, emerging countries, it should be more than 100%. I would not say we should be over-leveraged like China, because China, the financial sector has been over-leveraged in our view. No other country in the world has that kind of leveraging of the financial system. So I will not go that far, but I would definitely like to see us in the close to 100% range. If you look at the best performer in the sector, which is the banking sector, we know that it has this problem. It has a huge non-performing asset, which is officially stated as, which is about 10% or so of the total asset base, but that is a serious understatement. The true picture is about 2.5 times that at least. So we have a serious problem of about 20-25% of our asset base being non-performing. So that's a serious issue, which means inefficiency and a lot of corruption, a lot of embezzlement and scandals, financial scandals, one after another, and going without impunity. There is I have not seen a single scams pursued seriously and the perpetrators taken to task. So it essentially leaves open the whole financial sector to potential abuses, and we all suffer from that. Our financial sector is not in good shape, and on top of that, we have been hit by the pandemic. And that's going to make the situation worse down the line.
Right. Dr. Mansoor, thank you very much. You're absolutely right. In the Western world countries, as you well know, the capital market, let's just talk about the equity market, the stock market, is many a times greater than the size of the GDP. And the bond market is even greater. Bond market is even greater in size. Now in Bangladesh, if you look at Bangladesh, between the two stock exchanges that we have, we are sub 20%. Plus, there is not enough diversification. And as you rightly mentioned, the bond market is pretty much non-existent. And also on top of that, the insurance sector is, I think, 1.5% penetration. The other thing I wanted to ask you is, the practice that we have in Bangladesh of rescheduling. Just quickly reflect on the our practice of rescheduling loans. Dr. Mansoor, real quickly, what are your views on that?
With time, assessment changes. In the past, I have been a vocal critic of the practice of rescheduling and using that as an accounting practice to show that our financial sector is doing reasonably well, which is a whitewash in my view. But of course, with time changes, like in a crisis situation, like in COVID situation, yes, we have to be lenient. And here, it's a very special situation. Capacity to pay of most of the borrowers or enterprises have gone down, and we have to take cognizance of that. So most countries in the world have what they have done, central banks have allowed for regulatory forbearance. That means I will not ask you any question. If you pay or don't pay, I will continue to show you as a compliant for now and encourage you to pay. But I will not force you to pay because I know that you may be in difficulties. So Bangladesh is currently going through that in a situation where we already had a precarious situation. So what will be the result? The result is that I have no problem of this regulatory forbearance. I can understand it and we have to live with it, because not living with it, not doing it will make all our businesses go under, and we don't want it. We want them to survive first, and if they survive, then the banks will survive. We cannot make the banks survive by putting strong regulations and at the expense of the wholesale borrowers and the borrowing community. So we have to be lenient at this point. But the issue is that there is significant problem building up, and we have to deal with it. How we are going to deal with it? We know that there will be, when the regulatory forbearance, the bed sheet will be taken out, what is on the bed will come out. The skeletons of the bed will be coming out, and that we would not like to, we would not be very criticized. So what we need is, we have to be careful. We have to set aside as much resources as possible for provisioning purpose, because we know that there will be serious provisioning shortfall in all banks. And we have to be very careful, very prudent to set aside any profitability, any operational profit that you get for that bad situation when the regulatory forbearance will be over and people will be asked to service their debt on time. It's not going to happen this month. It's running out at the end of September, but they have to roll it out to December and beyond perhaps, but in some form or other. But we have to be lenient, but have to be prepared for very unpleasant outcomes at the end of this leniency period.
Right. Dr. Mansoor, I was going to ask you that when the moratorium runs its course, unless it's extended, it runs its course in September. What happens then? I mean, then over the next 3 months, you're going to see a tremendous problem. Do you agree?
Absolutely. That's why I said that there is certainly a number of, for example, a number of hundreds of RNG factories has already gone under. They are going to pay their debt. We know that thousands of SMEs or maybe hundreds of thousands of SMEs will not be coming back. They will not be able to come back. We know that personal loans, many of those will go sour. So these are the realities. These are the realities. You cannot change that reality. You have to live with that reality. The issue is that we have to develop our internal coping mechanism to deal with it.
Dr. Mansur, I wanted to ask you something else. As I'm sure you know, the financial crisis, that's the 2008 financial crisis that started out of the United States. The United States government allowed a few companies to fail. But then there were a lot more companies that could have failed if it was not for the TARP, Troubled Asset Relief Program, and massive injection of money into the system, because they were considered too large to fail. Now, my question to you is, isn't that pretty much same thing happening in Bangladesh, where we have allowed some borrowers to get to a point where they've borrowed so much money from the financial system that we could consider them to be too large to fail as well? Your views on that?
You see, there are two types of things. One is exemplary punishment for an institution or a person. Other thing is that punishment or person going to be a systemic risk for the whole sector? If it is a systemic risk, I will not pursue that. So you have to make that distinction. In my view, for example, if Padma Bank was allowed to fail, nothing would have happened to the banking system. But you cleared an example. So you need to pick and choose your strategy, where you have to do it. Now the former finance minister is saying, I should have allowed it to fail. But he couldn't because of the political pressure and other things. So bottom line is that the regulators, which is a part of the government, they have to collectively decide, not from political angle, but from the strategic institutional perspective, where I would bail out or where I would not bail out. For example, in this pandemic situation, as I said, I am all for regulatory floor. Individual case, like Padma Bank or like some other banks which is creating the mischief has done, you have to give some exemplary punishment. Both the perpetrators and the institution has to pay the price.
Let's move on. I would like to ask you now is, how do you evaluate Bangladesh Bank's monetary stance given the current situation? Your views?
I think their monetary stance is appropriate in the current context. What they have done, they have eased the monetary policy very significantly and deliberately. And that is what was needed in the current context. We have not gone as far as European Union has done, European Monetary Authority, or the Fed has done. They have basically, European Monetary Authority has essentially made interest rate negative, Fed has made it zero. We have not done that. Bank of Japan made it zero long time ago. So we have not done that. We have reduced it, but still quite positive and significant level. But we have eased it quite significantly, and that was needed under the current circumstances. And as I said before also, that it will not be inflationary under this low demand situation, but we have to watch out for the impact on inflation over time. This year, nothing will happen. I will not be concerned about it, except for the food inflation, where you have to take it. It's a supply side issue. You have to take care of food supply situation. It's nothing monetary problem. Money supply cannot solve, or monetary policy cannot solve this issue.
Dr. Mansur, let me ask you now, the cottage and SME industries in Bangladesh are not seeing much relief. What do you suppose we ought to do from a banking sector as well as from a policy stance?
You see, SME sector has been always saying to the media and other ways that is the backbone of the economy, because most of our workforce works in the SME sector.
Absolutely.
And that's like 70%, 80%. And if they don't come back in a significant way with their income and productivity and production level, then the economy will never come out of the ruts. That's the bottom line.
Absolutely.
Now, then what do you need? We have to somehow inject liquidity. Most of them does not need much capital. They live on small capital, but they need that small capital. And they have faced tremendous financial problem. They may have been evicted from their rented places, like a store, repair shop, or barber shop, or a retail shop. they cannot pay their rents, even electricity bills. So they are facing that kind of a small but significant barriers for their financial point of view. We have to protect them. The issue is to fund. Cost of fund is about 6% in general, and the borrowing rate government has capped it at 9%. So the spread is only 3%, and we all know the risk to return has to be commensurate with each other. So if the high risk area is the SME sector, we have to allow higher interest rate to compensate, create the incentive for the financial instruments to play a role in that sector. But that government, by putting a flat, one size fits all, has basically stopped that. So who is the victim? The victim is the small and medium and small industries and the cottage industries. They will be starved of funding. They need access to fund more than the interest rate. Interest rate is secondary. They are borrowing, and they will be borrowing for money lenders at 100% plus. Why can't we lend them at 13-14%?
Right.
If that allows them to get the fund, it's much better than getting it 100% from the non-bank sources.
Interest rate ought to be a market mechanism. This is not something that you arbitrarily set. And I very simplistically look at it like this. Let's say our inflation rate is at about 6%, right? Inflation is at 6%. So you calculate 6%, then there are taxes, and then the financial institutions have to make money. I mean, it's a no-brainer as far as I'm concerned. I couldn't agree with you more. I wish if the government were to relook at that, because I've talked to a lot of financial institution people running financial institutions and stuff, and they all of them unanimously are talking about the same exact thing that you are talking about here.
Look, among the banks, BRAC Bank is the most well positioned in terms of SME lending. It has the highest portfolio. About 50% of BRAC Bank's lending is for the SMEs. So that's a huge exposure for the bank. And BRAC Bank wants to keep on doing it. But we need to have that environment. We're the most efficient in the industry. But still, we can improve a lot in terms of our efficiency. But that will take time. It's not going to happen overnight. So this 3% margin to operate is you have to manage those small entrepreneurs and teach them, hold their hand. It's much more labor intensive, much more costly for the banks to lend, say 100 crore to SME and 100 crore to one or two big businesses. So they're not comparable, but the return is the same. So how could it be? Where would the money go? Money will go to the big businesses. So this is the most, I would say, inequitable, unjust thing that the government has done in the name of justice to the borrowers.
Oh, absolutely, absolutely, absolutely. We can talk about it more, but let it suffice to say, Dr. Mansur, that you and I totally agree on that. It just doesn't make sense. Even mathematically, it doesn't make sense. Okay? From any angle that you look at it, it doesn't make sense. So the banks, it costs a lot more money, a lot more administrative, as well as from servicing of the loans and stuff like that. When you're talking about cottage, small, medium enterprises, as opposed to a big borrower, obviously, how can you expect the bank to do it, at the same level, 9%? Just not possible. So the banks are simply not going to do it. So I wish that we would urge the government to relook at that, and because that's not a doable scenario. So let me just move on then. So given the current scenario, Dr. Mansur, especially in the COVID environment, how do you see the banking sector coming out of it? What do you see the future of the banking sector?
This is a very difficult question to ask, but I see it this way. If the bank board and management work with a real sincerity, they will come out reasonably impacted, negatively impacted. They will come. Everybody will be impacted negatively. There's no question about it. They can manage it better. But if they operate in the interest of their own businesses instead of the interest of the bank and the depositors, then the outcome could be very different. And what I am afraid is that many banks will use this regulatory forbearance to show higher profit, which is artificial. Because what I'm doing is that I am charging the full interest to the client, and the client is not paying. I'm adding it to the loan outstanding and saying, oh, my credit expansion has gone up. That's the biggest forgery in the world that can happen.
Right.
Some people are calling me that sir, the loan lending rate is growing faster in the COVID. I said, yes, of course it will happen, because nobody's paying and their outstanding credit level is going up, loan level is going up, because I have just added the interest rate to them.
Right.
This is the main problem. This
Right.
artificial growth. So
Right.
it looks on paper very good that banks are lending, things are getting normal. This is not normal. It is abnormal.
Right.
But those banks which recognize the problem and don't distribute the dividend, keep it all whole, and build up the provisioning for it, they will do better down the line.
Right, right. Dr. Mansur, you mentioned something that would be so apparent, yet people miss it, which is a report just came out that showed private credit growth has gone to pre-pandemic level. So
that's the biggest part that I can think of.
Exactly. So basically, accrued interest got added on to the principal. So it shows growth, is what you're saying. And the other thing I must mention that you brought out, which I think was very important, is for the time being, till their capital situation is adequate to take care of the shocks that may be coming down the pipe, banks ought to forego paying dividends and beef up their capital reserves. So I totally agree with you on that as well, Dr. Mansur.
Another issue here to flag: some banks are doing their capital by issuing perpetual bonds, and that is not right. Bangladesh Bank has given them permission, but that is not right. What they're doing is it's a perpetual bond. They will never be paying it off as if it's a sovereign authority. They are not in that position. Secondly, they are even selling that bond to other banks, which are government banks, and taking cash out. So the liability is being shifted to the public sector banks. We know underhand dealings take place in those things. So we are creating a much bigger problem also for the public sector banks by buying those perpetual bonds from some of those banks which are shoring up their capital in the name of issuing those perpetual bonds. So there's a lot of underlying implicit scams going on, which really needs to be addressed if we really want to address the financial sector issues.
Right, absolutely right, absolutely right. Dr. Mansur, we could talk about this again, talk about this subject for quite a while and not be done. In any event, Dr. Mansur, what a pleasure talking to you. It's just been absolute blast. Thank you so much for your time, Dr. Mansur. It's been such a great pleasure. I would like to thank our audience for joining us. I hope you enjoyed the session as I did, and with an invitation for you to join us for our next session. Stay safe. I'll sign off right here. Bye-bye.